Hey everyone, welcome back to the Investor Financing Podcast. It's mid-2025, and if you're looking to buy a franchise or funding one, you need to know the financing landscape is shifting fast. I've brought back SBA and franchise financing expert Beau Eckstein to break down exactly what's changing, where the lenders stand, and how you can still get deals done in a high-rate, high-scrutiny environment. Hey Beau, what's the current state of franchise financing now that we're halfway through 2025?
I think some of the banks are still very bullish. I do see some pull back with certain banks. They're scrutinizing a little harder, and I think it's just the state of the economy. But we're still doing 90% financing on some of our deals, 80% with some of our major banks. So I think overall it's strong. Going back to an older episode we did on publication from the International Franchise Association, the outlook for franchising in 2025 is very strong. And I see that because we work with a lot of candidates that are looking to buy franchises as well as doing the debt placement. It's a little tighter, but I'm still getting deals done. I'm not getting where I see the difference is you have to know which lenders to go to, because if you don't have enough post-close liquidity, or if the franchise doesn't have a certain Fran data score. So one of my lenders, for example, they use a Fran data score, which is a third party that scores franchises. So even if it's approved on the directory, it has a low franchise score, they might not want to do the deal, versus another lender has no problem because they don't look at the Fran data score. Knowing those nuances is what we do. We go, okay, well, it's not going to get approved here. Sometimes we have red tape because the lender doesn't like the deal for whatever reason. Too long of a ramp up, too much working capital, not enough liquidity. Then again, I could just flip the lender sometimes and they're perfectly fine with the same deal. So understanding the nuances of each lender. The other big thing in franchise financing is there are some large franchise organizations where they actually own like 10 or 15 different franchise brands underneath them, and then they sell the crap out of them. And now they go like gangbusters. And anyway, one of the biggest national banks used to make a lot of loans to this particular one. They said they put a kibosh to it. So basically, if it comes from that brand, they will not do a loan right now. So understanding that, because if I get one of the franchisees that wants to invest in one of their brands, I know I can't take it to this national bank because they don't. Now, is there some underlying reasons other than they did a ton of loans for them? I don't know. I would think that there might be a saturation and they're a little concerned. I don't know if deals are going bad or what, but anyway, those are things that you should pay attention to. Obviously, June 1st, the franchise directory got re-established, meaning if you're not on the directory, you're not going to get SBA financing. So that's the first thing to know. There's a lot of brands that started in 2023 and they're new emerging brands and they never had to be on the directory. Well, now you do. So I just had to get one of the brands listed on the directory in order for us to get the candidate into an underwriting with particular SBA lender. So those are the kind of nuances.
Have you seen any major shifts in SBA loan approvals, either in who's getting funded or what lenders are prioritizing?
So they changed the guidelines again. So before, if the loan amount was under $500,000, we didn't need to look for additional collateral. Now we have to look for additional collateral if loans are over $350,000, and we have to get insurance, life insurance. So those rules changed. The directory came back, and a bunch of other things, but not so much in the franchise space. It'll be interesting depending on what the economy does and all that stuff. Luckily for most of my candidates that I work with, they're buying recession resilient type of businesses where I'm not that concerned about the economy. For example, you own a heating and cooling company. If it's 110 degrees in Las Vegas, people are going to pay or they're going to finance to get a new HVAC system. They would, right? And so I like those types of businesses. Before we went live, we were talking about my sewer line, or my water meter, or my water main had a leak. Right, plumbers, they're going to be in demand. Drain cleaners that do the drain the drain removal type businesses, painting companies, appliance repair companies. I don't think they're going anywhere. I think those people are working from their home more wear and tear on the house. I think those business models are here to stay.
How are interest rates and inflation fears impacting how much buyers can borrow, or how are deals getting structured in light of that?
Prime rate 3 years ago was probably in the mid threes. Today it peaked up to, I think the peak in the last was 8.5. Now it's at 7.5. So SBA 7A loans are Wall Street Journal Prime. That's basically how the top 10 banks lend money out at. Most credit cards are tied to Wall Street Journal Prime. So prime plus margin equals fully indexed rate, and you adjust quarterly with whatever this prime rate does. I don't really see prime shooting up. I see it probably coming down a little bit more. I don't have a crystal ball, but I think over time it will come down slightly in the next year or two. All in all, you're anywhere on a franchise startup, you're anywhere from 9.75 to 10 and a quarter, give or take, because you can get better price margins if you're a stronger borrower. Although 10% doesn't sound super attractive, in the big scheme of things, you're getting basically a lender who's lending you 90% of all the costs to start this business, that it's actually a way cheaper than getting a partner in the deal, if that makes sense.
What are lenders requiring now in terms of down payment, collateral, or borrower experience that's different from before? Or is it pretty much the same?
I mentioned 350 loans over 350. We have to look for additional collateral. So if you're in all states except for Texas, because Texas has the Texas equity law, if we did a $500,000 loan or a $375,000 loan and there was no real estate, you have a collateral shortfall, we would have to put a lien on a property in order to do the loan if you own a property. Now, if you don't own a property, that's perfectly fine. I can still do the loan. So you actually get penalized. So that's a big change. And then having to have life insurance if the loan amounts over 350, term life insurance. But other than that, there's not that many changes necessarily. I think it's all been, those are the big changes that I see.
If someone wants to buy a franchise in Q3 or Q4 this year, what financial prep should they be doing right now?
One is understand what you're capable of investing in, meaning if you're looking at a $500,000 brick and mortar build out, $600,000 and you have 50 grand in your account, it's going to be tight. So really getting with a lender or a broker like myself and understanding all the nuances. And then, what I do in my introductory calls is really understand a little bit more of what you're looking to do. And then also what your capabilities are. Meaning you might say, hey, Beau, I've got a house I owe 200 grand on, it's worth $1 million. Well, maybe we're going to borrow the equity injection or down payment from that. Or maybe the franchise you're investing in is only 100 grand all in. And maybe we just pull an equity line. We don't even need to do an SBA loan. But there's pros and cons because I like to separate business debt from personal debt. So maybe we pull out a little and you lend your new entity the down payment proceeds. So there's ways of structuring it. We get you in line to talk to a CPA to make sure you're setting up the correct business entity. And you understand the tax component of it. So we get you into, a free consultation with our CPA. So all the ins and outs, and then we figure out, should we do a borrow against your 401k? You can borrow up to 50 grand, potentially, depending on how much you have in there. Instead of doing a Rob's rollover where you actually roll your retirement if you have an old retirement, that might not make sense. So these are the things we go through in our funding assessment. Would advise you to schedule a funding assessment so we can see where you're at, because I think lining up the funding way in advance makes the whole process way less stressful. Plus, you really know what would be the best fit from a financial capability standpoint.
All right. Huge thanks to Beau for giving us the insider view. If you're serious about buying a business or franchise this year, don't just guess, get a clear plan. Head over to bookwithbeau.com to schedule your discovery call and see exactly what you qualify for and how to structure a deal that gets approved. That's it for today's episode of the Investor Financing Podcast. We'll see you next time.
Are you feeling overwhelmed, like you're not getting enough content out there? You're not driving enough leads, not growing your business the way you want to? Well, I put together an ebook all about utilizing virtual team members and AI together to really grow your business, get more organic content out there. If that all sounds appealing and you want a free copy of my ebook with the tools I use, some prompts, and how I put it all together with virtual team members, you can go to bizscalingplaybook.com, grab a copy. It's an evergreen book. We're going to be adding different tools, different prompts as we continue to bolt them into our business. So anyways, it's free for right now. So go to bizscalingplaybook.com, download your copy. Hope you like it. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.